And there we go. We nailed in a little bit of a red day today, which is totally fine. Red days happen, and this month has actually been really, really nice. We haven't had too many of them, but it's still annoying when you do get them every now and then. Today was simply not a small cap kind of day. When the big stocks are bouncing, that's almost a clear sign that the small caps are going to be sleeping, and that's really, really what happened. We'll check the charts in a little bit, and you'll see that our lead gappers are only trading with about $10 to $30 million in dollar volume, and that is just not what you want to be seeing. Like I said yesterday, in yesterday's recap, we want to be seeing 50, 100, 150, even up to 300 million in dollar volume by noon with the small caps, and that's just not what we're seeing. So it's a little bit tough to trade. And then it was really annoying because yesterday's recap video as well, I said I want to stick to my original plan. I want to be placing limit orders in these key areas. And that's kind of what I did, but then I got shaken out because there was such a big spread on these small caps and they were getting halted, and I don't like to buy stocks that get halted on the way down. And then I was like, you know what, I'm gonna get rid of my limit orders, and my God, baby Jesus, it just, the price hit these areas and then bounced up again 20 to 40%, and I was like, oh, you gotta be kidding me. I made a whole video on this exact thing that I wanna do, and then today it happened and I somehow missed out on it. And then I had a little bit of FOMO trading, I guess, at the end of the day. Not really, but at the same time, a little bit with, I traded Carnival Cruise Lines, for example, large cap. Why did I trade that anyway? Took a small, like 2.5% loss on that one, which is totally fine in the ballpark. And then the first loss with AKER, which was kind of popping up on the scanner. Definitely a little bit of potential on a lot of these setups, but really the overall market and the large caps were the ticket today. They were the star players today. And honestly, on a normal day like today, probably if I wasn't streaming, I probably just wouldn't trade at all. I would understand small caps are not gapping. It's always good to watch it, have your finger on the pulse, so we're ready for when small caps start running again. But at the same time, it was a very similar day to yesterday. My scanner, by the time we were on the live stream, was running over 60 stocks. And that is a clear sign that it's just, a lot of these large caps, can't speak today, that are bouncing off the bottom, and that is just overwhelming the small cap world, which is fine. I know that within probably a week or two we're going to have a little bit more normality back to the markets, and these small caps are going to start ripping again. It's going to be good fun, and we're going to be ready for it. So till that happens, let's go to the charts now and hit that like button if you haven't done so already and you enjoy this content. And if you're totally new here, definitely consider subscribing. I would love to have you join an upcoming stream. Till then, let's go to the charts and think about what we could have done a little bit better today. Whew, guys, that was a tough trading day. And this is honestly why it has been a tough trading day for the last 2-3 weeks. Although this month we've been doing really, really well, but we've been doing well by kind of really being paws off, waiting for only big dips, not really trading breakouts like we typically want to. And it's kind of put me a little bit off of my focal point, center a little bit. I don't know, my original gap and go trading strategy, which is fine. Sometimes it's a little refreshing, but at the same time, I cannot wait till the markets are back to how they used to be. And I think as we have a little bit of bounce in this area, and as the big days, the really big red days start kind of slowing down a little bit, we're gonna get that. But that could easily be another 2 weeks from now. So I don't know. We'll see how this keeps going. Let's quickly go and check out our lead gappers and then kind of go from there. And what happened to our chart? Why is this all messed up? Let me quickly go here and lower it again. We gotta find the right spot because at one point these charts on the bottom, they flip over. So I'm gonna leave it here at that, and I can make this a little bit lower too. Okay, that looks good. And that was weird. Okay, so IMAC was our lead gapper on the day, and this thing pulled up a huge percent of 320+% pre-market. It had a tiny float of 4 million, and the shares outstanding about 8.5. 21 million market cap, $30 million dollar volume on the day. And this is a little bit low. This has kind of put me on edge a little bit. I was like, again, we're not seeing that volume in the small cap world. Basically everything from PLAY and above, you could disregard. It's not really part of the small cap challenge and the stocks we're trading. So, seeing these, 10 million to $30 million volume by noon is not what you want to be seeing. Right now it's 11:31 a.m. Eastern Standard Time. So by now, we should be at 50, 100, 150, maybe 200 or $300 million volume on these small caps, and we're just not seeing it. And that's because traders are trading the market, they're trading SPY, they're trading the VIX, they're trading large caps, and that's because right now there's a lot of opportunity in those areas, which kind of takes some of the attention away from these small caps. I mean, IMAC had a big U.S. government partnership continuation contract. They had new telehealth options. They had a lot of news, but out of the gates, it was choppy to trade. It was the order book was very the spread was big, right? So the order book was very lightly traded, which means it was being halted like just absolutely crazy in all directions. Right now, we're kind of near some big time resistance at 147, 150, and $3 with the 180-day moving average coming in as well. And a lot of these spikes have been failed spikes, so I just want to keep an eye out for that as well. I don't know. I'm a little bit disappointed the way I guess I kind of handled IMAC today, because we had another lead gapper, AKER, that could have been a phenomenal trade, and we kind of messed it up a little bit. So let me say, yesterday in the recap video, you guys probably remember me talking about placing some limit orders near key long-term support and resistance on lead gappers, getting those red to green moves and those pullback moves. And here I had a limit order at 157 exactly, and that was almost the perfect low. So we could have had a really solid bounce trade on here. But this thing, I didn't like the way it was getting traded, and it was getting multiple halts on the way down. Right now it's halted again. It's basically it's been halted so many times today, I've lost track. It's like, what, 24 times it's been halted. And I typically don't like dip buying stocks that are getting halted on the way down. And that's because, we saw it with APRN and the other one that we were trading that day. Which one was it? I can't remember the name. But, those got halted like, I forgot, like over 5 times on the way down. And then after we got in, it got halted 3 more times. We were down 30% in 3 halts. Luckily, we were able to close that position for only a 2% loss because the bounce was tremendous on it. But you don't really know if you're getting too early of an entry with, stocks getting halted down. And sometimes the reversals on them are really tough to time because of the halt. So I went ahead and removed my limit order actually. So this could have been a phenomenal trade. I mean, just really good. 50% bounce that could have been. So a little disappointed how I traded this one, but I mean, just look at this thing. It is so shaky the way it's trading. So I don't know. Did it just get halted again? It might. The chances of this thing being halted before the end of this recap is like basically 99%. And then AKER, which wasn't right away our lead gapper, but it was kind of put on our watch list a little bit later because it was being chatted out in the chat room, and it made total sense. This thing, up 120%. Let's see here. It was just a little bit of a late bloomer, so I didn't get it on my original scan. Right here, you can see it started popping up around 9 a.m. I typically run my scan around 8:30, so I kind of missed this one. But, looking at the long-term chart, we identified that, 2.5 is tremendous support and resistance on this thing. And guess what happens? This thing pulls back to 2.57. Again, I think that's exactly where my limit order was. And then it rips here 27-30%. I'm like, oh man, we missed it again. So I was a little bit disappointed, but at the same time, I really didn't like how these lead gappers were trading. I felt like there was not a lot of people trading them, which made them getting halted, and it didn't make the reversals very nice. The breakouts are weak. And that's what's been making a lot of the trading a little bit more difficult on the small caps, because on any normal day, AKER and IMAC would be well into the 50 to 100 million in dollar volume, maybe even to 200, 300 million, because a lot of traders are trading them. But right now, traders have so many options that you don't really know which is going to be the stock that everyone's looking at. And oftentimes there is no one stock that everyone's looking at. So we had it was one trade on AKER. The first one was right here on this pullback, and it could have been really nice, honestly. This thing had a small float of 2.275 million, which is exactly what we're looking at. And I was thinking, okay, this thing could absolutely rip here, red to green move. Here we go. Has a quick pullback, and we have an almost near perfect entry here. I was waiting for a secondary spike to the upside. The problem is this was a partial execution. We only got 75 shares out of my ideal 400 shares, and then we sold off again. And I originally just kind of wanted to take profits here, and this would have been a 7% trade. Could have been really nice. I moved down my limit order, and then we got another entry here at 68, and then another entry here at 66. So now I had a kind of full position size that I was looking for, and I was looking for that return here to the upside and make a new high. And I was thinking from 10 to 10.15, that's kind of when I want to give it its shot. After that, I don't really want to keep holding it. And, at 10:14, then 10:15 came, and then we had the dip, and I was like, okay, I'm not going to hold on to this. Which is a little unfortunate because we did have a little bit of a move here, and I probably could have got out for maybe 3-4% profit. Would I have done that? I don't know. Probably not, because this candle happened so fast, but maybe I would have been able to sell here for a small profit. I don't know. It's a little bit disappointing how this thing even traded. And honestly, the best time to trade it, like almost always, is that in that first 15 minutes. That's really when the volume's there. And after that, the volume really disappeared with AKER. So good thing we eventually closed this position. Took about a 4% loss, even less, like 3.5% loss. So it wasn't really too bad. But it's not that fun to see these things just kind of dying out, even though this could be a good trade or could have been a good play. AKER kind of reminds me of yesterday a little bit. We had MEDS that had a similar situation. Pre-market kind of just sells off a little bit, has a huge support line bounce, 44%, but then, pulls off the rest of the day. Check out, what was that other one we had? HOTH, this was a lead runner from the day before as well. Similar situation, beautiful pre-market, up 100+%, 150%, pulls back to this $5 support, big bounce, but the rest of the day just sells off. And then I think yesterday we were also trading BHATB, and similar situation, where did our, one second here. Yeah, so this was yesterday. This one was actually one of our lead gappers, but it was so lightly traded that I stopped looking at it. But basically similar situation here, starts pulling back, pre-market, has one nice little bounce in at 30%, and then the rest of the day, including today, just absolutely sells off. So got to be careful with these small caps right now. We're not getting nice follow-throughs, and at best we get nice support line bounces, but you don't really know where they are, and then you might get halted on the way down. So it's just been a little bit tricky, and that's why I've been extra cautious. It's a little annoying because sometimes I'll get too cautious in the morning, and then I'll miss those 10, 20, 30% bounces because I missed the entry by like 3 cents. And it's happened to me I don't know, it's happened to me probably over 10 times now in the last few days, and it's getting a little annoying because that's not even my typical way to trade. But yeah, so it's just overall, it's paid to be cautious. I mean, again, this is one of my best months, but at the same time, it's been really, really tough. And I don't think I've been trading like any breakouts lately, which is a little bit annoying as well, because yeah, that's what we've been, practicing for so long. But I know that within probably a week or two, we're going to have normal volume back in the market. So I'm looking forward to that. I do have a little limit order left over here with SPCE. I think we might be able to get a dip on it, but I don't know. A very conservative limit order. It might be extended hours or something like that. SPCE would really, really have to dip down. I tried to buy CCL on a little bit of a pullback here to former support. And the reason I wanted to buy CCL is because on the daily chart, and this is a large cap, this is Carnival Cruise Lines. And right here at 14.32, we've had we had the original first bounce, we had some retest right here, and we broke above it today. And I was like, okay, pull back to $14 area, could be a really, really good trade. So I bought it at 14.72 on this last kind of really aggressive pullback, or what I thought would be the last one. We had consolidation here, and then I ended up closing this trade at 14.35, where actually I probably should have been buying. I've been getting skunked on a lot of these trades on these large caps. Yeah, so now, did its move. But even a perfect entry and a perfect exit on something like this will only net you about 5%. So that's why I typically stray from large caps. But I thought, okay, this is a good opportunity on CCL. Unfortunately, we didn't get it, and I closed it for about a 2.5% loss, which is no biggie. But still, it's kind of like, oh, okay, well, that's just, classic today, getting smacked in the face twice for no reason. Today could have been such a profitable day if I kind of stuck to my original plan again. I think that's the worst part about it. So yeah, today you can see here, $44 loss on AKER, and then a $30 loss on CCL, wrapping up today with a $74 loss. Not really a big deal. It's in the greater scheme of things, it's a tiny number, and it doesn't really affect anything. It's just I think what's bothering me is the fact that, IMAC and AKER, we could have really nailed them today. If I just stuck with my original thesis. I didn't like the way they were trading, and even now they were difficult to trade, and then just not a lot of volume in the area and in the small cap. So I don't know. I think I'm just gonna have to deal with it for what it is, and just kind of accept the fact that today I was just totally not aggressive when I should have been. Should have stuck to the original plan, and then just trading this kind of stuff, this nonsense, not really nonsense, but like this stuff that I should not be trading with my small account gap and go challenge account. If I wanted to hold this for a swing trade, maybe an entry here could have been kind of interesting. But then, then I probably would have been buying on a big red day, not the first big green day breaking out higher, or not the fourth big green day actually breaking higher. So I'm kind of mixing up strategies now, and that's just really, really unhealthy. I think I'll wrap up the video there before I ramble on too long, but I think the biggest takeaway is, I just got to stick to these small caps, stick to what I know, stick to the strategy. And so far over the weeks, I mean, we're getting close to doubling our account size now in just a few months. So, everything's working really, really well. It's really when I start, getting aggressive after 10 o'clock. It's when I start, thinking, okay, well, maybe I could, squeeze out another trade after 11 o'clock or something like that. That's really when I start making a lot of mistakes, and almost the majority of all of my mistakes come from that time. I mean, yes, of course I make mistakes in the first 15 minutes as well, but that's the time to get aggressive. So if I just stick with getting aggressive there, stick to my original plan, and if I make a mistake with my original plan, so be it. That's totally fine. I mean, my winning ratio is, I would have to double check, but it's getting a little over 60% now. So, you're not right all the time. It's totally fine with being wrong, cutting losses quickly, but it's a little annoying, missing out on those good opportunities in the morning. But it's just been a little bit more tough to trade lately. So just got to keep that in mind. And overall, in the long term, everything's going well. So I can't really complain either. All right, guys, I'll definitely wrap it up this time. So thanks for tuning in. Don't forget to hit the like button if you enjoyed the content. Definitely consider subscribing if you're new here and you want to learn more about trading. Whew, I've been mumbling a lot lately. And I'd love to see you on an upcoming stream and an upcoming trade recap video. So I will see you then, hopefully next time. Till then, guys, stay safe, wash those hands, and make some awesome trades. Ciao, ciao.